The day the banks went dark, how access turned into permission. 1. The morning everything stopped. You wake up like any other day, but something feels off. Your banking app doesn't load. Account access temporarily unavailable, it says. Mild annoyance, until your card gets declined at the gas station. The cashier shrugs, system's down. Cash only. You check another ATM. Then another. All dead. That's when it hits you. You don't actually have your money. You have access to it, when permission is granted. And right now, permission is revoked. So what does that actually mean? It means you're not the customer anymore. You're a participant in someone else's system, and the system just paused the game. Footnote. The illusion of control over digital money collapses the moment systemic access is withdrawn. 2. The calm before the panic. Outside, the world still looks normal. People walk dogs. Trucks deliver packages. The grocery store TV hums. Government regulators are coordinating to ensure stability. Translation? Don't panic, but panic. You realize how fast comfort turns to confusion. Rent, fuel, groceries, everything assumes access. The second that flow freezes, your financial life stops on impact. Cash only becomes the new border between functioning and frozen. The scariest part? The people who caused it will call it orderly. Footnote. Economic disruptions are often reframed as temporary measures to maintain public calm while restricting liquidity. 3. When belief becomes the bank. Every number you see in your banking app isn't cash, it's confidence. A promise written in code. Fractional reserve banking means the bank keeps only a fraction of deposits on hand and loans out the rest. It's efficient, until everyone wants their money back at once. That's called a bank run, and it doesn't start with screaming crowds. It starts quietly, with one person checking the balance, another moving funds just in case. Fear spreads faster than facts, and once it does, the math doesn't work anymore. So what does that actually mean? It means banks run on belief, and when belief runs out, so do withdrawals. Footnote. The stability of modern banking depends less on capital ratios than on collective psychological confidence. 4. The partnership of power. Governments and banks are not opponents, they're co-owners of the same machine. Banks fund governments through bond purchases, governments protect banks through law and regulation. When the system breaks, the two close ranks, not to rescue you, but to rescue each other. They call it protecting depositors. You experience it as account frozen. They say, your money is safe. You hear, you can't use it. And deposit insurance? It's not a vault. It's a psychological firewall. It works only as long as you believe it does. Footnote. Institutional alliances prioritize systemic stability over depositor autonomy during liquidity crises. 5. When trust collapses. Every modern economy runs on invisible agreements, that your paycheck clears, that your card swipes, that money moves when you need it to. Break that chain for even a few days, and society doesn't decline, it convulses. Payroll halts. Stores go cash only. Shelves thin out. Panic feeds on delay. Within days, financial inconvenience mutates into social disorder. Because hunger, medicine, and fuel don't care about policy, they care about access. Footnote. Financial paralysis rapidly translates into logistical breakdowns when liquidity flow halts across supply chains. 6. The survival blueprint. Let's be clear, this isn't about fear. It's about leverage. If all your wealth lives inside someone else's network, then it's not truly yours. So what can a rational person do? Keep emergency cash you can reach without permission. Spread assets across institutions and types, bank, tangible, durable. Learn to decode official language. Liquidity event means you can't withdraw. Temporary holiday means we stop the clock. And above all, remember, banks aren't utilities, they're gatekeepers. Their goal is stability, not your comfort. Footnote: diversification of access, not merely diversification of assets, determines real financial independence during crises. 7. The final question. If tomorrow your app froze, your cards failed, and your bank doors locked, how long could you live without permission? That's not a conspiracy question. It's a readiness question. Because control isn't about how much you own. It's about how freely you can use what you own when you need it. So what does that actually mean? It means money isn't power, access is. Footnote: the essence of sovereignty and finance lies not in possession but in the continuity of use.